Stock markets have had a spectacular run this year, but equity investors confident of an economic resurgence in 2020 may want to be cautious. Our next guest says valuations in several markets are getting stretched. XM Australia CEO Peter McGuire joins us now in Sydney. So, Peter, yeah, an incredible run-up really in 2019. Surely this cannot continue.
Well, Paul, I don't know whether it can continue, but I tell you what, it's been outstanding. And when you look at the performance, no one would have guessed that you would have seen 1.5% to 2.5% per month gains. If you look at the Dow, you look at the Aussie market and across the Asia section and India, I mean, even the UK put on 14%. So it's just been absolutely knocked the ball out of the park.
So when you look at these numbers, you were explaining to me just before we joined you that it doesn't really square away with what interest rates are doing.
No, I think if you take a view, you say you're living on a deserted island for 20 years and you just plonked down today and said, right, what did the market do over the last year? If you hit those numbers, said China's up 17%, what would interest rates be? Oh, they should be 7%. Aussie's up, I'm just looking here, 24%. It should be at 8 or 9%. So it's not a true indication, and you've got monetary easing all over the world, and this has probably been the fuel to get these markets to where they are. And what's ahead of us, I think, the next decade is going to be outstanding.
Inflation expectations are rising. We're seeing the 10-year break-evens now around the highest level since July. Are we going to see some inflation scares next year and potentially having an effect on how central banks look at the rest of the economy?
Well, I think so. I think you'll probably get, inflation's got to eventually tick up, though we haven't seen that in energy prices. If you look at where the crude market is, it's 55 to 60, 63 for, Brent. So those really haven't been the headlines that we saw a decade or a decade and a half ago with strong growth there. So I feel as though that the next decade you'll see certainly inflation head up higher, but I'm not sure whether you're going to really, be ridiculous, because you haven't seen wage growth, you haven't seen strong underpins as far as those key inputs to really get inflation up and running. So it's going to be a fascinating, 12 to 18 months ahead, and what happens with elections, Brexits, and so on.
Talking about the elections, we have, it seems, priced in most of that phase one trade deal optimism in the markets with record highs here in the U.S. But we know with the election campaign getting started, everybody will want to take a jab at China. So what are the risks there going into next year?
Well, when you think about it, there's been the Elastoplast to make this deal, phase one, and it's been, strapped together. The Chinese market's up 17% for the year. There's no doubt that there's some rumblings internally, and we all understand what their 3 and 5 year plans are, and also what impact it's going to have to the domestic economy. But still, you've got to say that they're still doing reasonably good numbers. I think there's going to be a little bit of uncertainty probably in the over the next year. What are the next steps as far as these trade wars, and what does China's rebuttals do, or whether they, play hardball? I think the uncertainty is going to be a bit of nervousness, but I think the fundamentals are there. Everyone wants a deal and everyone wants to grow their economies.
In terms of deals and growing the economy, what are your expectations for some other trade deals? I'm thinking particularly the US-UK. Now that Brexit is a done deal.
I think the US is going to play hard on Euro if they play hard on Brexit. And I think that's going to be the trade-off. So I'm not sure how that plays in the first quarter of next year, but I feel as though that Mr. Trump's really got his eyes on that auto sector as far as Europe. And if there is no doubt that the Eurozone is not doing as well as what we anticipated. If you put your mind back a couple of years back, Germany and so on. So it's going to be a hard slog for those guys. And I think over the next, 2 years to 3 years, they've really got to start hitting some good numbers to get those growth momentum moving forward.
In terms of other risks, nobody talks about the deficit in the US much these days.
Sure.
It's $1 trillion. How do you continue to ignore that? When does it become a political or an economic problem?
Political, I think you've got another year away, because the mantra at the moment is President Trump's only got one agenda, and that is to try and get back in power, and he's got his eyes focused on that one. They're just kicking the can down the road, Paul, with cheap money and, of course, with very, very strong employment growth. I feel as though that there's enough momentum there to take the gaze away from that. You've got a very, very surging US stock market. The Dow up 27, S&P up 33% for the year. So I think that really, they're the headline numbers. Yeah, take on board the debt, but overall the economy's doing very, very well.
I guess to your earlier point as well, where you were talking about some of the run-ups we've seen in equity markets, the role that central banks have had to play in
Of course.
that. If things,
it's been a decade long.
Well, look, if things get uncomfortable, doesn't the experience of the past few years tell us that, oh, don't worry, the Fed will be back to save the day?
Absolutely. Nothing's changing. You know, it is a new normal. And when I first heard that term, you know, the best part of 8 or 9 years ago, it was a little bit like, well, what does that actually mean? But yes, we've seen those unheralded times. We're looking at interest rates at, 400 and 500-year lows. And what's the storyline? I think that the momentum at the moment is all about trying to get some growth. Underpin that, you've got strong demographics, you've got these surging, new age economies, tech economies and so on that are really changing the landscape. And that's going to be the fascination moving forward over the next decade or 2 decades out to 2040. Don't let your mind go from 7.5 billion people at the moment, take it up to about 9 billion in 20 odd years. Those consumers are going to drive total growth across the whole planet.
One of the things that's been missing in developed markets for a very long time now is inflation, but a number of guests we have begun talking about inflation risk,
Sure.
to which my reaction was always, really, isn't Japanification more of a problem?
Well, the Japanese, that's a unique model. When you saw what happened in the 80s as far as real estate prices and the Nikkei, I still remember it, 39,000 points in 89. Have a look where it is today. Japan had not a bad year, really, when you're thinking about those numbers. Tokyo was up 18%. So incredible numbers from a low base. But I think that there's still that momentum to flood through that economy. They've got an ageing economy, very different to something like China or something like India. So maybe their time on that top horizon is starting to, move down the curve a little bit.
But what I mean is inflation is MIA. Where is it?
Of course.
We haven't seen it since the 80s in any serious way.
No, we haven't. And I feel as though it may just be, bubbling along there. Japan's got some other issues to attend to before we get to inflation in Japan.
All right, XM Australia CEO Peter McGuire, thanks so much for joining us.